All right.
All right, welcome back to another Stock Talk live stream. We got Bacon again, of course. How's it going, man?
It's going all right. How are you doing?
Good, good. Yeah, it's been a good week. It's been a busy week. Sounds like it's been a busy week for you too, though.
Yeah, it has been.
Yeah, so I think we need to just start off with a Crocs chart because why not? It's seen a little bit of weakness now. It got into like I think it was the $86 area, which is pretty. It's getting interesting. It's getting more and more interesting, and now you
Yep.
feel better because it's below your initial buy price, right?
Yeah, I was able to buy a little bit more, and I'm hoping that it comes back down a little bit more again. And yeah, it hasn't. It's been an awkward ride. I would like some clarity where it's just like straight down, and I can grab some more along the way. But no. It's been choppy, so we'll see.
It's just the market. It'll do what it
Yeah,
does.
yeah.
Oh, it looks like we got Leo on, so let's bring him in.
Yay.
Let's see.
Oh,
Hey,
how's it
Leo,
going?
how's it going?
Going all right.
Good, man.
Made it just
Good.
in time. Had to hand off the kid.
Nice, nice. Yeah, I think kids trump live streams, right? So
Right.
For sure.
Oh man. Yeah, we were just looking at the, Crocs chart just to do it. Because, degenerative
Is it
Crocs.
like watching looking at the aftermath of a car crash?
It's like watching paint dry. No. It's in a nice pullback here. So it'll be interesting to see what happens. But yeah, we were just talking before we started. We were talking about their just some of their bottom line numbers, and it's crazy. It's one of those companies that seems like the market's really pressing it in for like a decline in top line and bottom line because shoot, they could stay where they are right now, and if you have a net income yield of 11%, you can do a lot with that as far as buybacks and everything. But yeah,
For sure.
it's an
I,
interesting
I
one.
think I think definitely the market doesn't believe that net income yield is real.
Oh yeah, no,
Wouldn't be
for
the
sure.
first time that a niche apparel company has uh, over earned for a period and drawn a bunch of investors in, only to have the stock bottom out.
Yep. No, I agree. It'll be interesting to see what happens. I went to shoot, it was a wedding in Missouri. Like literally everybody I saw had Hey Dudes. I was like, what is going on here? Like, it was
I had
funny,
never even
but
heard of Hey Dudes until like I was looking at Crocs as a stock like 2 years ago, and like that was
yep.
the first time I had ever heard of them. So maybe, but I'm old, I guess, so I'm not the one to ask. As everyone
Yeah.
knows, I'm going on 40, so I'm the elder statesman, I
Oh,
guess, of
Yay.
the
you're
community.
Means
not
you've
that
survived.
old.
You've survived with all these money moves.
No, but it was funny. Like I would see like, a family or something like that, and it would be like three different generations, and all of them would be wearing Hey Dudes. And I'm like, what? Like this must just be like a really like, I don't know, more southern thing. But
Where
today,
was this? Where was it?
oh, this was in what was it? Missouri. So
Oh, okay. Yeah, maybe it's more of a, I don't know,
okay.
Midwest or Southern thing.
So can you guys see anything?
Um,
I
I
cannot.
Yeah, I was gonna say based off of me looking at the YouTube live stream, like I have it muted on another tab. Yeah, I just see
Okay.
blackness on the like where the stock chart should be on StreamYard.
Oh,
Yeah,
okay.
yeah.
Gotcha. Yeah, that's strange. Let me do something. I'm gonna have to drop and then rejoin.
Stall.
I, yeah, yeah. Stall, juggle something real quick, and I'll be like right back.
Uh,
All right.
Fun fact: I am really bad at juggling. So how are you doing, Leo? Oh, you're muted. Oh.
I'm doing all right. How are you doing, Bacon?
Yeah, no, I'm doing okay. Doing okay. While we're waiting for Jesse, spoiler alert: I did zero due diligence or prep work for this moment. So
Nice.
yeah,
So you're coming in fresh.
yeah. Feel free to carry the
no
live
biases.
Stream. Yeah, put the live stream on your back. getting your
Well,
gym.
I feel like you've heard at least some of the pitch before.
I have, and I think I can like weasel in some value add with like some questions if you're comfortable with answering them. But it's all good. Like laid back stuff here.
Sounds good.
Yeah. I wasn't lying, by the way, viewers, when I said there were some technical difficulties working out the kinks here. Actually, you know what? Since we're
I am
Jesse's
back.
Yeah, there we go.
Can you guys can you see it now?
Yes.
Yeah. Hold on. Yep.
Okay,
We're
cool.
good. We are
Are we in
good.
Yeah.
business?
So
All
so I've got a new computer. I got a Mac, and as I was going through the setup,
Short
to
apple?
do yeah, I know, yeah, right. If I'm getting it, it's yeah. But as I was getting the share screen done, it was like, oh, allow permissions, and you might have to restart Chrome. And then it looked good on my screen, but I'm guessing something happened with the I don't know, the broadcast or something. But good thing.
Yeah.
Back in business, sweet, cool.
Yep.
So Leo, I chatted with you. I mean, kind of briefly. I think I know you for the Bullish Mexico man.
Mm-hmm.
And we were talking
Leo El
briefly.
Chapo Costa, huh?
Yeah. I keep on making jokes that the real play in chips is probably Mexican chips, like tortilla chips, because I love those.
Bullish
Forget
Tortas.
Well, which chips brand? Maybe we can make this a reality, and you can buy the stock that
oh man,
sells the chips you like.
I can't remember. I mean, they're probably not even like legit. They're probably like branded and like from, I don't know, PepsiCo or something like that.
Yeah, maybe.
There's the what are they called? The Juanitas. Those ones are pretty good. And then there's another one.
Let's see who makes these. Juanitas tortilla chips.
And then there's another one that are really freaking good.
Okay, it looks like it's privately owned.
See, so it probably would be a good investment if it's private.
You can enter the private markets, right?
Yeah.
Yeah, but there's actually you probably can invest in Mexican tortilla chips because there's a decent amount of consumer packaged goods companies that you can invest in.
I think I'm going to do it. Everybody will be buying like AI chip manufacturers, and I'm going to be buying Mexican chip manufacturers.
Probably good.
That'll be my play.
I mean, I wouldn't be surprised if tortilla chip companies outperform at least some computer chip companies.
Dang! You went there.
Yeah.
I thought about doing that. I was like,
yeah. They might be good good dividend payers too. Get that dividend yield.
Oh, here. So there is actually a company, Gruma, which you can invest in. I think it's on the Mexican exchange, GRUMA, one of the leading corn flour and tortilla producers.
Gruma stock. Oh, let's go. P of 17 with a dividend yield of
I've literally never looked
1.6.
at the stock chart, but hey, that's not bad.
Dude,
35% past year.
Look at that like non-volatility right there. That's probably less volatile than bonds.
That chart looks actually similar to most Mexican stocks I've been following.
Really?
Like went up a lot in January,
mm-hmm.
and then kind of has leveled off recently.
It has
a
been
real question.
Has been funny though, like Meb Faber has been on his on a tear again, saying, you know, like emerging markets are where people should look at carefully and closely. If you're like somewhat value, somewhat growth, or some weird hybrid.
Look at 2009 to 2016 for this company. What in the
Oh wow.
dear God?
Yep. For Mexican companies,
That's actually very
Mhm.
that's actually very unique for a Mexican stock during that time period.
Oh really?
Because like
Hmm.
2010, basically for the past 15 years, so excluding the last 2 years,
Yeah.
basically the Mexican stock market has done nothing
Huh.
for a decade and a half, which is actually part of the bull thesis, because everything is basically the interest in Mexican stocks had gotten so low that everything got very cheap. The
Yep.
like there's so much room for incremental investors to come into the market. Like before, like the primary investor base for Mexican stocks has been Mexican pensions, which are
Oh.
not famously particularly dynamic investors.
Yeah.
And you know, there's been basically no Mexican IPOs for a long time. Like if you look at the stock chart for the Bolsa, really bad stock chart. Yeah, but I think like with the amount of foreign direct investment that's been coming into the country over the past few years and the renewed interest, like you know, if you just type in Mexican nearshoring stocks into Google,
Oh yeah.
there's so many articles being written about it now.
Yep.
So I do think
I was
that
just reading one from Morgan Stanley the other day, and it seems like everybody's kind of getting on the nearshoring train. It's been happening for a while. Like you've been seeing it for a while, but it seems like it's just like it's not. I don't know. It's not like overly hyped. It's just been kind of steady, and it just keeps on going and going and going, which is
right,
pretty
exactly.
interesting.
And I think like the interesting thing is that Mexico is both. But I think it's one of the most underlooked like segments of imports into the United States. Like I think most people don't realize the scope of what is produced in Mexico. I can share more, but so like the Mexican automotive sector, I don't know. So if you look at like 9 out of 10 vehicles produced in Mexico are exported almost entirely to the United States.
Yeah.
They're in the top 10 in terms of global producers for all types of categories related to the automotive industry. Different things like they're the top beer exporter in the world. They're the 6th largest egg producer, 7th largest chicken producer. They're a major hub for medical devices and other types of electronics, especially in Tijuana, Guadalajara, Monterrey. Like they're already a major producer with a lot of advantages for companies that want access to the United States market. And I think from here it's only going to grow as manufacturers look to step back from China. I don't think China
Yeah.
is going, you know, to fall off a cliff. Obviously, China offers a lot of advantages, but you know, you go back 10 years ago and you compare China from 10 years ago to China now, the costs have gone way up.
Yeah.
The costs politically of doing business in China have gotten worse. And if you go back to the pandemic really exposed how say the same word again, but how exposed the supply chains are when you're having to, you know, deal with cross ocean supply chains.
Well,
And
just having
so,
a lot of your eggs in one basket as far as production, right? Like, I know there's been a
right, and
pretty
that
big push to diversify production of many things outside of China, just to kind of spread it out a little bit more.
for sure,
And
and
you
you know,
have,
like
Go ahead.
Yeah, I think like in part, you know, a lot of the growth of the U.S. tech industry can be owed, you know, to China. But you know, I think a lot of producers have gotten, like you said, very dependent upon China. But obviously, the value proposition has been very attractive to invest in China. You know, they offer one of the highest skilled labor forces, if not the highest skilled labor force in the world, in the type of scale that people are looking for. But you know, over time, that has come with costs.
Yeah.
And you know, we're really seeing the move away from continuing to invest in China. You know, and I don't think Mexico is the only beneficiary. I think there's other beneficiaries. Vietnam, India are both two major. Thailand is another beneficiary. But so this isn't going to be, you know, a winner take all. Like one country is going to replace China and that's it. I think you're going to be seeing different things spread to other countries. And interestingly, the investment into Mexican manufacturing is not all coming from the U.S. I think something like 50%, somewhere around 50% of like new investment in manufacturing is coming from Chinese companies. So like Chinese companies themselves are looking to move manufacturing to Mexico, not just the US. But I mean, there's a lot that Mexico has to offer. So like in comparison to something like Vietnam, Mexico has a geographical proximity to the United States. There are very, very close cultural and political ties, right? There's existing developed transportation infrastructure, both road and rail, as well as ports, right? And on top of that, because Mexico has already developed a relatively robust manufacturing base, they have a pretty high skilled labor force, right?
Oh,
so, you know, for the things like automotive, for medical devices, for electronics, for all these different goods that like those aren't probably going to be made in Vietnam. Like Vietnam doesn't have, you know, not to put Vietnam down, right? But you know, the expertise is not at the same level as Mexico, and so that's going to take a little bit extra time to develop there. And so Mexico already has that head start.
Yeah.
But then on top of that, it's significantly cheaper than China. So Mexican, and this was data from into 2022, but Mexican labor is on average $350 an hour in dollars, which is almost 40% cheaper than China. Now that will correct over time, but you know, with all these advantages, and with more and more companies choosing to invest in Mexico, the network effects that builds. So not only the companies themselves, but you have their suppliers will start moving operations there. You have logistics moving there. You have other businesses see that this has been successful and they're going to move there, right? This, you know, I think you're going to see the same type of activity that you saw in China, where the more money that comes in, it snowballs and attracts more and more money, because they can see that all these networks have been established and have been working, and you know they want to join that. They don't want to go trailblaze somewhere else. You know.
Mm-hmm.
Yeah.
Not to put anyone on the spot here, but open question from Kale. Are there any ETFs that may be worth looking at for the near or friendshoring thesis, specifically with Mexico? Then
So with Mexico, so there is the index, which is EWW, which basically expresses my opinion on the ETF. Composition. The problem with the Mexico ETF, and I think it's fine. Like I think it's broadly going to benefit from these trends. My main issue with it is that the composition is very sleepy. So if you look at the top holdings, let me pull it up now. Like I think the top holding is a telecom.
Yeah, I was gonna say probably telecom because of that. I forgot who that really rich guy was. Like super rich guy.
Yeah, I had a Vanguard sheet up. It was like,
here we go. So the
American level.
The number one holding is a bank. Then you have two consumer staples companies. Wait, no. Oh, actually, okay. So actually, the number 2 holding is a holding that I recently added to my portfolio. Then you have Walmart, which I also like actually. But then you have telecom. You have a couple of materials companies. You have some other consumer packaged goods companies.
Man,
So
this
the main,
concentration is almost like QQQ.
so the thing is that like there are companies in Mexico that I like, right?
Mhm.
So I like the airports.
Yep.
I like Walmart, which is not just Walmart, but they also they're basically a conglomerate of kind of discount grocers.
Mhm.
They've done very well. I don't think they've done quite as well as Walmart US, but they've been relatively close. You have FEMSA, which I've talked about on Capital Mindset. And you have a few other stocks that I think are interesting, but the problem is they just have to sit side by side by very slow growth, boring companies. So
a lot of the US, well, I kind of see companies like Walmart, Coca-Cola, things like that. So a lot of the US variants of those, does that mean they don't really have exposure to Mexico, or like how is this structured between some of the like major US stock names, and how are they completely separate entities in the Mexico like variants?
it's a good question. Let me see.
Because I thought if you like bought Coca-Cola US, you basically had exposure to Mexico revenue, and vice versa for
Well,
what? For
sort
Walmart, I'm
of.
not really sure, but
So it looks like Walmart de Mexico is a subsidiary of Walmart, but it's also has its own market capitalization. There's also a Kimberly Clark of Mexico, with Coca-Cola. So my understanding is that Coca-Cola, so KO in the United States, is more like the licensing, right? They're the brand.
Yeah.
yeah.
And so like Coca-Cola FEMSA, which is a stock you can buy, KOF is the ticker. So it's basically Mexican Coke. It's actually Latin American Coke, but they're the bottler. And there's actually a number of Coca-Cola bottler stocks that you can purchase.
Bacon.
What I missed?
You said okay.
I'm sorry.
He said it's basically the Mexican Coke, and Bacon lost it.
Okay.
Do you want me to
right into that one?
more? I'll explain it. I'll explain it if you want, but I'll...
So it sounds like a lot of the US companies are going to have some type of exposure to the subsidiaries that operate in Mexico. But if you want a more direct, like kind of like a higher amount of exposure, it's definitely worth like getting into the direct Mexico like listing of, or the direct Mexico subsidiary.
Right. If what you're looking for is the geographical exposure, right? Like you can invest in Walmart and you're going to have exposure to Walmart in Mexico, but it's not like
it's going to be
you're
very
also
small.
exposed to like the rest of Walmart, right? So you'll benefit, but it's it's not a targeted exposure. It's the same with Coca-Cola. Like if you want exposure to like the beverage trends within Latin America, then you would want KOF. But if you just like Coca-Cola, the brand, and don't have a geographical view, then you can just purchase Coca-Cola stock, right?
Yeah, that makes sense. So something that if I remember correctly, have they been getting a lot of tailwinds for automotive production just from some of the U.S. governmental regulations that have crept up against EV tax credits? Because I believe a lot of the EV tax credits are kind of just offered to the vehicles that were assembled or produced. I don't know if it's in the US or if it's in North America. I seem to remember them, like Mexico, getting a decent amount of production from that.
So I don't know this. That's a really good question. I don't know the exact details. I can tell you that nearly every car sold in the United States has had at least one part been manufactured in Mexico. It's very common that you have shared production between both Mexico and the United States. So you'll have some parts manufactured in Mexico, some parts manufactured in the United States. And I don't know like what the details are, but presumably parts could be manufactured in Mexico to bring down costs, but the actual like vehicle assembled in the United States, and perhaps that qualifies for whatever subsidy. But I don't think that there's virtually any cars that are assembled entirely in the United States.
Yeah.
But I would expect that the proportion of vehicles made in Mexico versus the United States is only going to increase, especially with the UAW strike. Before too long, I think companies are going to find the United States too cost prohibitive to manufacture much in terms of automotive. Given that they can just go, a couple hundred miles south of the Texas border and build it in Monterey.
It could be my bias, but like last I saw, also, especially with even with like EV specific or EV related factories, and here in the States, they're like the geography is such where it should still be integrated well enough where Mexican manufacturing and American manufacturing for future EVs should complement each other.
Mm-hmm.
Yeah.
I don't know if you guys
it
can
looks like,
see this.
Yeah,
but
I was looking,
yeah,
Jesse. It looks like it does qualify.
Mhm.
Yeah, so basically, we under the new bill that was passed for the continuation of the tax credits it's basically agreement between the U.S., Canada, and Mexico.
Yeah,
So
NAFTA
it
2.0.
That'd be
looks like
part
a
of basically
decent,
NAFTA. Yeah.
yeah. So it looks like a decent amount are actually targeting EV production in Mexico, so they're tax credit eligible.
Yep.
Which is pretty dang interesting.
So manufacturing, consumer goods, some infrastructure plays are what you're interested. You think there might be anything to like say ports or railroads, Leo, or no?
Yeah. So railroads has been there. There's a couple ways to play railroads. One is you could buy the Mexican railroad company is extremely cheap, sort of degenerate.
Okay.
You could purchase Union Pacific. Obviously, they have their own set of issues, but they do basically own all the rail gateways on the U.S. border to Mexico. Now they don't have lines in Mexico, but all the like when the railways move over the border, then Union Pacific picks them up. Then you could also, and I always mix this up. Canadian Pacific, I believe, is the one, or is it Canadian National? Whichever Canadian railway that purchased the Kansas City Southern network. They own the rail line to Monterey, among some other Mexican rails.
Oh, okay.
Another, you could also look into trucking. Trucking is going to be a major component because a lot of stuff that's going to be manufactured in Mexico is either going to be manufactured in Tijuana and then trucked over the border into Southern California, or it's going to be made in Monterey or along factories that are on the Texas border, so they'll get trucked into Texas. A lot of times you'll see, I would expect, if not already, to have additional factories popping up in Southern Texas to take advantage of this dynamic. Then the other major manufacturing center in Mexico is what they call Bajío, which is like northern central Mexico, around like Guadalajara, that kind of like west central part of Mexico. That's probably more rail I would expect that to be too far for trucking, although you could see some trucking there as well. But when we're talking about transportation, though, my favorite way to play Mexico right now is the airport conglomerates.
Okay.
Which, unless you've heard it pitched before, I think most U.S. investors are not super familiar with the airport business model, given that all the U.S. airports are essentially private or governmental businesses, and so U.S. investors are not. It is a common business model globally, but not in the U.S. But the easiest way to think about it is a giant mall with essentially a steady stream of customers that have to walk through your mall.
Yes.
Now that's a little simplistic, but like the basic way that it gets set up is these airports were essentially already existing pieces of infrastructure that were owned by, in this case, the Mexican government. In 1998, they were all essentially auctioned off to private companies through what's called a concession. So these different airport groups, these different businesses that were competing to get these concessions, are given a 50-year. We're given at that time a 50-year renewable lease to operate and profit from the airport, provided that they work with the government periodically and implement capital improvement. And so in return for taking on the capital improvement projects on behalf of the government, they're granted certain fees that they can charge every passenger that comes through their airport, along with the ability to develop additional businesses. So that would be things like duty-free shops, restaurants, advertising, parking, ground transportation, own and operate hotels, all these, like whatever you can layer on, convenience stores, right? Anything that you think that a passenger through the airport might spend money on, they are essentially allowed to develop that. But from time to time, they'll have to drop a bunch of money on building another runway or expanding a terminal or making repairs or so on and so forth. But it's really turned out to be an extremely good business. These businesses have very high margins. So, we're talking 50, 60, sometimes 70% EBITDA margins.
Jeez.
And at least with the Mexican airports, they send all of the free cash flow they generate back as dividends. So you get a nice, like depending on the year. I mean, it could be anywhere from 3 to 7 or 8% yield in terms of dividends, along with double-digit growth on bottom line. So, like, if you were to pull up the stock chart, if you were to compare PAC to EWW, like the difference over the past decade has been crazy. But so the reason why I like that, though, so obviously the business model is very, very good. They are also depending on the airport operator, you can basically get targeted geographic exposure to parts of Mexico that you believe are going to benefit from different trends. So like I've talked in the past about, not all of Mexico is the same, right? So like you may look at Mexico and say like, well, it has 1% GDP, like what's going on? I thought this was an emerging market, right? But if you were to take out southern Mexico, for example, then suddenly the GDP rate goes up to 4%, which is very good globally. And even more when you focus just on like the Monterrey area. So, for example, the airport that I like the best, OMAB, which is Central North Airports, something like 50% of their revenue is coming from just the Monterrey airport. And so that's a very pure play way of betting on the growth of that city and the surrounding region.
Okay.
Because obviously,
Interesting.
as manufacturing grows there, then like the amount of passengers coming through that airport and surrounding airports is only going to grow, and all that is going to be more fees, more ticket fees, more people spending on food in the food court, more people paying for parking, more people paying for taxis, and on and on.
Yeah. So, I mean, I think most of what we talked about has been like tailwinds from just nearshoring, like business moving. Um, have they experienced? I kind of go to like I wonder what the tourism industry has been like over there. As far as I know people that have started going over to Mexico more frequently.
Mhm.
I'm not sure if you've looked into that at all, or what if that's been growing at a nice clip lately.
It has been.
Just yeah.
Yeah, I think the U.S. Mexico leisure travel really has been a growing trend. Like you can look at, another airport stock is ASR. ASR owns the Cancun airport, and they, for reasons completely different than OMA, they've also had a huge tailwind over the past decade as Cancun has really developed. And, PAC,
Oh
that's the third
man.
airport operator. PAC owns Cabos and Puerto Vallarta. And so those two resorts have done well. Now, the risk with tourism, though, is that it is more discretionary.
Mhm.
It is obviously less linked to nearshoring as a trend. So, for example, ASR, so they own Cancun, they own some other southern airports, and they recently acquired an interest in some Colombia airports, including Medellin. So they're going to have nearly no exposure to nearshoring, and they're very much a pure play on U.S. Mexico leisure travel, or maybe not exactly U.S. but Mexico leisure travel. Then OMA, because they own Monterrey and some different kind of border airports like Juarez. Let me pull up their portfolio, but basically cities in the north along the Texas border. They're going to be much more a pure play on growth in Mexican manufacturing. And then for kind of like a middle of the road, maybe best of both worlds approach would be Pacifico. So their nearshoring exposed airports would be Tijuana and Guadalajara and Hermosillo. But then they also have the more tourism related markets like Cabos and Puerto Vallarta. So they kind of have both, which is sort of why, like, if you look up like the year-to-date charts for all three, so ASR has not been doing particularly well recently, as I think the tourism demand has been somewhat drying up after we had probably a revenge travel boom over the past year. OMA has been up the most, and then PAC has been kind of in the middle. But yeah,
It's interesting.
Hmm.
I'm starting to understand why you're bullish Mexican airports.
join the team. Join Team
Well,
Mexico.
it's interesting because, like, I mean, I've heard of and I've read of the nearshoring thesis for, gosh, it's probably been over 2 years now. It seems like it just keeps picking up more and more traction. But the issue that I've always had is, like, I don't know how to play that. Like, how am I going to play that? Do I play that with some type of US equity that has some exposure to it? Yeah, it's pretty interesting. But man, Mexican airports.
Mexican airports. Yeah, I think
Ships and planes.
I think like the way that I thought, like, I liked that idea as a way to play it, because it's not my problem with investing in industrial companies is that how cyclical they are. So even with tailwinds, like, you could still get burned.
Yeah.
Like if you want to buy, a cement company or a railroad, right? Like they can be hurt in different ways, even while like the tailwinds are behind them.
Yeah.
just given how hard to predict those businesses are. So like I was gravitating more towards, well, if nearshoring continues, then like that's going to benefit the average Mexican consumer, right? They're going to be earning more. There's going to be more work. The like wealth is going to increase. And so in that type of dynamic, then consumer companies do very well. And you can see that, in different places in different emerging markets, like as manufacturing grows and sustainably grows, and the consumer does better and consumer stocks do well.
Yeah.
So
I wonder.
I liked the airports because you can get some of that initial activity, travel activity, but then like people are going to fly more when they feel like they're wealthier, right?
Yeah.
I mean, I think it's like 50 hours to drive from one end of Mexico to the other, right? It's an enormous country, just like the U.S.
That's what I was just thinking that too, because I've been thinking about like flying to Mexico, and then as you're saying that, I was like, well, yeah, if the consumer strengthens there and the entire like region strengthens, then you're going to probably have a drastically increased rate of like inter Mexico flights from just locals.
Right.
Just wondering if people were to try and come up with their own plays on this, are there any useful areas that could help them in their due diligence that you have found helpful, especially if they're English speakers only?
Well, the good news is that, like, if you're looking, and so I would say, so a lot of Mexican companies are actually listed on New York Stock Exchange and have investor material in both English and Spanish. And depending on the company, the earnings calls are probably in Spanish, but transcripts you can find English translations of the transcripts pretty easily. Other than that, like there's a lot of research that's come out in the past year related to nearshoring. I just found a really good report. I can send you a link, Jesse, on that Prologis came out with on industrial real estate in Mexico. And I can find some more to share. But yeah, I mean, there's other ways to play it. Like I had mentioned FEMSA. FEMSA is a conglomerate, a Mexican conglomerate. I think they're the second largest in the index. But their major business is the OXXO convenience stores and gas stations. So any gas station or convenience store fans may be interested in that one. So they're going through a divestment period where they're getting rid of some kind of unrelated businesses. But when they're done with that, they're going to be left to about 2/3 of the business being related to convenience stores and drugstores. So that'd be primarily OXXO, then a Valora, which is a European convenience store chain, and then some different drugstores, including Cruz Verde, which is the largest drugstore in Mexico. And then 1/3 of the business will be their minority interest in Coca-Cola FEMSA, which is the major Coca-Cola bottler.
Okay.
So that would be a more like just directly Mexican consumer slash basically convenience store business model.
The Mexican Musa.
Right. Oh, seriously, yeah, it is.
Go.
Wait, actually,
it's a little. It's a what's that?
Is it a share buybacker, cannibalizer, or what have you? But yeah,
not
yet.
Not necessarily, not yet.
Okay. And it's fine. It doesn't need to be.
But yeah. So, like the basic idea is they're still in expansion mode. So, like the OXXOs do very, very well, and they're looking to eventually expand into the United States. They're expanding in different parts of Latin America. They're adding some digital businesses. They actually have a pretty big fintech kind of under the radar. Like I don't, it's actually interesting that most OXXO customers, and that's actually like a large percentage of the Mexican population, will pay their bills at an OXXO, for example. So a lot of people are already used to like doing different banking activities there, and so there's some room to pick up some additional stuff there on the fintech side, but not to, not to get too far in the weeds there. That's another one that I like that I would suggest people take a look at. You could look at the Coca-Cola bottler itself, although as Bacon pointed out, it might have a cursed ticker. So careful there.
I don't know if people caught where I was coming from with that, with the humor on that, or what I thought was funny.
KOF.
Yeah.
KOF.
Oh,
Kingdom of
KOF.
Yeah. I got love for you, Kingdom. It's all good.
KOF. To the moon.
Yes.
And then there are a few interesting ones that I haven't really delved too much into that are just like if you have access to the Mexican stock market that are not New York Stock Exchange listed. There's a couple like water quality companies that are interesting. There's Mexican Domino's and Starbucks. There are a couple of different interesting smaller industrials, but definitely there's a lot there. I think most companies you're going to look at are going to be very, very cheap, given the lack of interest in the stock in the Mexico stock market for such a long time. And if since I've spoken so much on the positives, like just some risks to be aware of. So obviously,
give us the bearish.
Obviously, like this is an emerging market, right? So I will say that in comparison to other emerging or frontier markets that you could potentially invest in, I would say that Mexico is quite stable. So AMLO aside, who has been relatively meddlesome and controversial, the Mexican electorate does tend towards business-friendly conservative governments. And I would fully expect that the next president is almost certainly going to be, well, I don't know, almost certainly, but I would say is likely to be conservative. It's not common that a more left-center or left-leaning president in Mexico stays for more than like their term, right?
Mm-hmm.
You typically see, and you see this a lot in most Latin American countries and probably most countries in the world, that once you've had a period of time with a left-leaning president, you switch to a conservative-leaning president for the next period of time. But I think the politics there are relatively stable. They have a good central bank. They've rarely had issues with inflation. So the central bank has done a good job of keeping that under control. In comparison to other Latin American countries, Argentina.
Dang, there goes the moving bus.
And again, headlines aside, the rule of law is pretty strong there as well. Relatively safe. Businesses are generally willing to move money there. So, but again, emerging market. So, like, although it is stable for a Latin American country, it's not as stable as the United States, right? Inflation is higher than the United States. There are less. The institutions are less strong than the United States. There's more corruption, right? Especially at the local police level. So these are all things to be aware of. Obviously, cartels are an issue. Now, I say that cartels are they're obviously a real issue. They're a real issue that affects normal Mexican people and can affect companies' willingness to do business there. But I also think that it is somewhat sensationalized, especially given the success of stuff like Narcos and stuff like that. Like cartel content sells well. And so I think for that reason, it tends to be sensationalized. And so while I would be cognizant of those risks, especially, for example, Cancun has been struggling with with certain cartel activities and crime there. So you certainly need to be aware of it, but I wouldn't be running away based on that, right? And then the other thing I would say is that the Mexican stock market and the Mexican, I don't know, the average Mexican company. So because they've been relatively starved for equity capital over the past 2 decades, there are not a lot of stocks that are publicly traded. Most Mexican companies heavily use the debt markets, and kind of the average investor has been the pension plans. So it's going to take time for investors to come back. I think that's already started. But one thing to be aware of is that volatility is higher for Mexican stocks than the U.S. stocks. You just have less volume overall, and so stocks can go down or up. You could go and say like, "Hey, why the hell is my airport stock 3%? What news is there?" And there is no news. It's just down, and it'll be up again. It's fine, right? So just things to be aware of when you're investing in Latin America.
Yeah, it's interesting because it kind of sounds like it's set up for like potentially if the nearshore thesis plays out and continues to play out, you have things that are trading relatively cheaply. My question would be kind of capital allocation back to investors. What are they doing with that? It seems like most of them are paying out dividends, and that's how they're returning capital to shareholders, which makes a bit of sense. I'm not sure if a lot of companies if buybacks are normal there. If they're trading so cheaply, then buybacks are great. But in general, if you're paying out dividends, investors can just purchase more shares anyway. It doesn't matter. Other than taxes.
Yeah, I mean, the airports have trended more towards heavy dividends, although they have been incorporating some buybacks lately.
Okay.
I would like to see them do more buybacks. For example, OMA, they do some buybacks, but like the majority of the capital return is still dividends. But I mean, the company is trading at less than 10 times EBITDA at almost 70% margins. Like you would like to see them buy more shares. But they just have they have very conservative management. Another thing that I would perhaps like to see them do is try to bid on more airports, right? So concessions will come up around the world. So like recently, Pacifico acquired the concession rights to the 2 Jamaica airports. Like I mentioned before, ASR acquired concessions to some airports in Colombia, and also has the Puerto Rico airports. But I'd like to see them be a little bit more aggressive there. I think like the prices that they're willing to pay are very, very low. But I think that they could afford to pay a little more, given how good the business model is. You could if you compare to other airport conglomerates, there are other companies that are significantly more aggressive at acquiring airports. One is actually an Argentinian company. CAAP is the ticker, Corporación América Airports. That they'll aggressively go out and they acquire the Armenia airports, or they recently bid on and are likely to win the Nigeria airports, right? I'd like to see them do a little more of that. I don't think we get that, but in the meantime, I think it'll still do quite well.
Is there? I mean, usually higher volatility can often boil down to just bad liquidity. Do you think they would even have enough liquidity for buyback programs? Would that be if they instituted large buyback programs, would they even be able to absorb that many shares, do you think?
I don't know. That's a good question. I actually haven't really thought about modeling that.
I'm really interested in this just because it seems like it's, I mean, a lot of investors, they're starting to look at it, but it's not really on a valuation basis. It's still pretty cheap. A lot of them are cheap. So there's there's potentially a lot of re-rating that could happen if everybody starts flooding to it, which would be good. I'm curious about the liquidity, and I'm curious what
It's
I'm just
relatively low.
generally.
I just looked it up. It's looks like for OMAB and PAC, OMAB and PAC, average volume is around 37,000 shares per day, compared to something like Musa, which is like 220,000.
Yeah,
Or
they
so
can
yeah,
just sit on the
lower
bid and
liquidity.
like it'll just never go below that amount.
Limit orders are your friend.
Yeah.
But I will say that they do have a Mexican listing as well. So
Yeah, I would
it's
think
possible you're
liquidity
just
would probably
splitting.
be better over there potentially, locally.
See if I can find that. Yeah, it is. So like locally, it's at 783,000 shares.
Yeah.
per
Okay.
day.
Yeah. Yeah. That's fine. Interesting. Oh, yeah. The other thing I was gonna say is the other thing that I'm trying to wrap my head around is just currency risk, between U.S. and Mexico currencies. I'm not sure. Yeah, I'm not sure what to think about that.
Yeah, I would say that the pace. So, if you believe in the nearshoring thesis, and if that continues, then I would expect the
Yeah.
peso to continue to appreciate against the dollar. And so, if you have, if the Mexican company that you invest in has a significant peso revenue stream, then that would benefit you as a U.S. investor.
Yeah.
And so I think, let me just.
I mean, I kind of
I'm
like
trying
it.
to compare the GAP-B versus. I'm going to compare to see how it's done against the U.S. version.
Arbitrage.
Oh. I'm just thinking if you have that much investment, typically I would assume that if you had that much investment, if anything, you would be leaning towards more stabilized economy and environment. So kind of go hand in hand. I don't know.
Yeah, so it looks like if I'm looking at the Pacifico Airport Group, the U.S. listing is up 22% year to date, and the Mexico listing is up 9%. So in this case, the
So
U.S. listing is benefited from the currency movement,
yep,
which
yeah,
peso has
it's
appreciated against the dollar. Now, the peso is
oh
one of the
yeah,
worst currencies to own for over a decade, and so there's actually a lot of room for that to move up against the
yeah,
dollar. You don't want it to move too much against strengthen too much against the dollar, because then that the more the peso goes up, the less attractive foreign direct investment is.
Yep.
But there is still room for it to catch up from how far it's fallen.
yeah. I mean, it seems like year to date it's up 14% against the dollar. So a decent amount of those returns have just come from currency strength.
14% year to date. But if you look at so in 2008, the peso was at 9, almost 10 cents.
Yep.
Per peso, and
Yep.
it got as low in 2020. Got as low as 4 cents, and now it's at almost 6. So,
it was between probably 8 to 9 for a while there, and then man, it has just been absolutely destroyed.
Bitcoin fixes all of this.
Yeah, if they just had Bitcoin, none of this would be an issue.
All right.
Now this is Mexico, not El Salvador.
It'd be fine. Huh. So let's see. So you got currency risk, but currency could also be a tailwind. I would lean more towards it potentially being a tailwind. But yeah, your thought on it not strengthening too much, that's good. I wouldn't have really thought about that as far as foreign investment. So I almost feel like the best case scenario would be just more stability than anything else, whether that's at like 6 cents, 7 cents, or whatever.
Yeah,
having
I would
a
say
stable currency peg to the USD.
I would say what you would want to see is just kind of a slow like grind up
Yeah.
on the value of the peso, which that shows that you have flows into the currency, and so that would be kind of validation that you have continue to have the foreign direct investment. But you
Yeah.
don't want to see it go up really quickly because then that's going to discourage additional investment as prices become too high.
All right, this is going to bother me because I jokingly call it NAFTA 2.0, but there was an update to it, and it's technically called something else. And
Yeah, what is that called? Let's see. NAFTA 2.0.
Yeah, like it's not NAFTA 2.0 technically.
Oh, it's
effectively.
USMCA.
Yeah, that one. There we go. Yeah. So
United States. It's very, very creative. It's called the United States Mexico Canada Agreement.
Yes. Which pretty much is
They've had a long time on that name.
Yeah.
They're like their name plus our name plus their name.
But wait, we need one more word.
Yeah.
Agreement.
Yes.
Agreement.
Yeah, so it's sorry, that was just one of the things that like bothered me throughout this live stream was I forgot the name of it. But all right, so do we want to address the Kale question about tax or no? Because I know this might not be.
It's something I'm interested in. Something that I was going to say though is I think if I feel like if more and more production, whether it's automotive chip manufacturing, goes to Mexico, I feel like it's probably going to incentivize the U.S. to not help Mexico or stabilize it, but like they're going to be more and more tied together as far as like as long as Mexico is doing decent, we have an agenda essentially to be able to not make encourage their success to a certain extent, right?
Yeah, I would say, I would say the U.S. definitely benefits from Mexico doing well. But I mean, the cultural ties though between the U.S. and Mexico are so, like strong and getting stronger.
Yeah, for sure.
There's like the population of Mexicans living in the United States, either like not just first generation, but second, third generation. I need to look that up. It's a very large number. Population of Mexicans in the United States.
Kale, if we don't reach your specific question, best I can say is reach out to your broker.
Taxes.
Or tax advisor.
Yeah.
So taxes. Okay, so there is a withholding tax on the dividends, even if it's in a retirement account. It's not a lot, and it's like 5 or 10%.
Oh, okay.
But yeah, something where I don't think it's a big deal. If you buy the ADRs, you just get a withholding tax when you get the dividends. I don't think you have to file anything, but I'm not obviously.
Okay.
If you have any tax questions, ask a tax professional.
Yep.
And I think Kale, you had asked about does NAFTA affect this, and I would say yes. For some reason, I didn't mention it in my initial spiel, but that is a main, attraction there is you already have a free trade agreement set up.
Yep.
So it makes shipping stuff to the United States very easy, and that shared manufacturing, right? So like the ability for you to have various parts made in Mexico, various parts made in the United States, have it assembled wherever, right? This makes it very attractive for manufacturers to, at least move some operations there, and later can move more. It looks like there are 37 million people of Mexican origin in the United States.
Jesse, are you there, or did we lose you?
I'm here. I
Okay,
think.
all right. I was gonna say worst case scenario, like I'm sitting on some questions for Leo.
Yeah, go for it. No,
Oh,
don't wait
sweet!
for me.
Yay! All right, so this can be related to this presentation, or just in general, or both, whichever you'd like. I know that you like valuing things with forward numbers, be it forward multiples of your choice. Uh,
Hmm.
so what I'm getting at is what are the more consistent or more credible sources that you find for these? And I imagine you still come to that number yourself, but have you found any good sources out there that are usually on the better side?
Um, hmm. I would say, I don't know. I think ticker. I think like the consistent consensus seems to be okay. Let me actually just look up and
Mhm.
see what it looks like. I would say estimates tend to be conservative, but at least for the airport, I would say for the airports,
Mhm.
numbers. I would say I would pay more attention to the estimates, like how they flow through passenger numbers or
Oh,
revenue
okay.
numbers.
Yeah.
Because the
Mm,
business is actually really easy to like once you have traffic numbers, which they release every month,
Mhm.
then like the rest of the business is really easy to um, figure out from there, right? Because they have set fees for every passenger. You can kind of reasonably see like what they're spending on. Um, like the business is pretty easy.
Mhm.
Um, because they release numbers every month, those estimates tend to be pretty good. Um, I would say some of the other stocks, like you're lucky to find a handful of analysts that have any estimates on them.
Okay.
So
yeah. So, I was gonna say,
your best bet
for
is
some of
to
these, I don't
learn to
know.
speak Spanish and call the IR team.
Okay. Oh wait, and these are IFRS, right? Or is there a different accounting system for a lot of these stocks?
IFRS. Yeah,
IFRS, yeah,
IFRS.
yeah, yeah. Oof, that is tough for me.
Yeah, yeah, that's a tough one. So I'm thinking about airports more. You got me thinking about airports, Leo. So in my mind, I'm thinking like, okay, maybe the bearish thesis is that you said increased capex potentially. Maybe nearshoring isn't as much of a tailwind, so maybe foot traffic doesn't grow at a super crazy clip. The other thing I'm thinking about is you were talking about the agreements. I believe it was agreements with the governments for X amount of years. Is there any
Mhm.
risk that those would potentially change?
Yes. So I would say, first, I would say I wouldn't worry too much about capex.
Mhm.
Capex tends to be predictable, and they
Yeah.
earn high returns on their capex, and a lot of it is actually guaranteed. Like in, yeah, I need to check to see if they have this written into their concession, but like I know, for example, with concessions with other airports, with other airport groups, like they'll get guaranteed IRRs on capex. So like you can spend like as far as I'm concerned, like spend as much capex as you want. Like I know you're going to get 15% or 20% IRR. So I wouldn't worry too much on the capex front, but
Okay.
like the main thing to worry about in terms of the business model is them not getting the passenger growth. Obviously, they got hit really hard in COVID when nobody was going to the airports, right? And so
Yeah.
these are
Yeah.
relatively, I wouldn't say heavily, but like these are relatively levered businesses because in normal years they're steady, right? And so you have a lot of capacity to add leverage to the business. Um, they're not, they are a conservative management team, so they're not like really highly levered, but obviously when you have big drop offs in passenger traffic, then that can hurt them. Um, and so, if nearshoring is wrong and Monterey doesn't grow, right, that people don't flow through these airports, or there's think maybe there's a heavy recession in the United States, and manufacturing demand drops off and nearshoring stalls out, right? Then you could see passenger growth stall out as well. So that, that could be potentially a risk there. And then, like you had mentioned, the concessions. So the expectation is that in 2048, when the concessions are up, that they get renewed. But obviously there's a risk that they're not renewed.
Yeah, and that's also like 24 years, right? So
right. So
yeah.
But I think there was a little scare at some point that there was some concern that AMLO would try to mess with the concessions in some way.
That's
or
what I
even
was
try
thinking. I was
to-
thinking more
Yeah.
towards the like forced renegotiation of the concessions or something like that. Because right now it just seems like they're a cash cow.
Right.
And those concessions are pretty much a huge part of that. So I'm not necessarily as concerned about what happens in like 20, 30 years or whatever, but just the risk of like almost like a forced renegotiation of the concessions that could really
that was it.
adversely
That
affect
was
them.
yeah. You're right. Like that was a headline, I think like 2-3 months ago, because there was, I forget exactly what it was. I think it was like lithium or something like that. There was the Mexican government was talking about, or I actually look at the details, but there was like they were going to essentially take back the concessions on lithium mines in Mexico. And so there was concern like, oh, well, maybe they want to repatriate the Mexican airports.
Yeah,
but
a lot more than
I
that.
think there's a big difference between like mineral rights or like use of natural resources and, an airport or infrastructure.
Yeah.
I think the government is a lot less likely to do that. It's not, not a 0% chance, but I would be less concerned there.
Yeah,
no, that makes
sense.
So
it would be interesting almost to just do a theoretical of if they were renegotiated, how that would potentially affect bottom line and valuation, just to get an idea of potential downside risk. That's probably I feel like that's the biggest thing that I can see that would be like a oh crap moment. Like that could really send it.
For sure.
But other than that, I think I don't know. I think the nearshoring thesis is going to play out. To what extent is probably to be argued or debated, and time is only going to tell on that. But
right, exactly. Like I think the
the
skeptic on it would say that this is a short term trend, right?
Man,
on the next U.S. recession, but yeah,
like
I believe it.
You think about how much we grew just through overseas development and production done in China, and how long that lasted, and if that's shifting, like I don't know. It could be a short thing, but I think more likely than not, if the U.S. has really good relations with Mexico and it progresses, it could turn into a pretty substantial duration that we increase production in that area.
Yeah.
I mean, even just stuff like how culturally similar the U.S. and Mexico is, right?
Yeah.
We like the United States is like the second or third largest Spanish-speaking country in the world. In terms of Spanish speakers, like the amount of people that speak English in Mexico, like just the geographical similarities, the amount of people that live in or have lived in both countries. I think that's an underappreciated fact there.
Yeah, I agree. I just
wonder. Sorry,
like,
Bacon.
Oh no, you're good. Just wondering, like, oh crap, I had it and I lost it. That's annoying.
It's all right. While you try to figure it out, most of these, are they kind of variable dividend payouts?
The airports are variable, yes.
Oh, very cool.
So it tends to be somewhere in the
just like percentage of cash flow or something like that they're paying out.
So it tends to be about 75% or more of cash flow gets paid out
Okay.
as dividends. Now if you check like their press releases and everything, so every year they get together at their annual meeting and they declare the dividends, and it has to be approved by the board each time. It's always some different. So they'll say like, for the year 2023, the dividend is X, and it's going to be paid out on these dates or in these installments. They'll say like to be paid in installments, and the first one is this, and then later you'll see them like, okay, now we're going to pay on this date the next installment of X. Right. So it's on one hand that like it's like the size of the dividends is nice, and the fact that I guess they're not letting the cash pile up on the balance sheet, right? So like I think I didn't mention this before, but like one criticism of some Mexican or Latin American countries or stocks is that these companies can tend to let cash pile up on the balance sheet. Some of them may be like family run or like the market capitalization is actually like a minority ownership. And some of these management teams or these ownership groups are happy to just let cash pile up, which can be pretty inefficient use of capital. So like the fact that they're paying out so much of it in cash prevents that, which is an underappreciated point, especially when they're not super aggressive on capex.
I remembered what I was going to ask, and actually you hit upon one of them was corporate governance and your findings or anything cool. And you definitely pointed out something very cool with the dividend, or at least companies that pay out dividends and that ownership structure. So that's neato. The other thing though is I like that we're now at a point for Mexico as a country and for America, the United States of America and Mexico, that
United States of Mexico.
Yes, because that that no, like I like that we've now gotten to the point where like we don't even talk about historic like controlled blackouts or planned brownouts or what have you. Like that's just no longer an issue. Or at least for like stretches of Mexico. I'm not sure about all of it, but yeah. So I mean, there's definitely a lot here to work with.
I'm just waiting for
it's
Intel
pretty
to announce that
interesting.
they're building a fab in Mexico.
Who is?
Intel.
I said I'm just waiting.
Oh, yeah.
I'm hoping that Intel or TSMC decide to build a fab.
I think
in Mexico.
I feel like Intel for sure will. I don't know. I
well, Tesla's building a gigafactory in Monterey.
Yeah. That's
one of the largest single
they'll have
FDIs.
one. It's a single gigafactory, right? Or did they announce a new one?
Single gigafactory.
Okay, yeah.
Tesla, what, Giga Mexico?
Yeah. I think they've been building that for a year and a half now, something like that.
I thought it was newer than that. I feel like the announcement came out just in the last 6 months.
I don't know. I thought it was maybe it was the last 6 months. I thought I was looking at it like a while ago though. Tesla Gigafactory.
Come on, Elon. He's gonna announce the next gigafactories on Mars, guys.
Well, there's been a whole news flow about like, oh, there's going to be a gigafactory Saudi Arabia or a gigafactory Turkey, or there's probably going to be another one soon.
Yeah,
I think.
Antarctica.
Yeah.
Penguins will be working for Elon.
That's right.
What is it?
I said Antarctica. Penguins will be working for Elon. Yeah. untapped labor force right there.
Hey, there you go.
It looks like there was probably rumors of it late last year, and then I think it was announced maybe earlier this year. So
okay,
but yeah.
All right. So, are there places that you would recommend people avoid? Maybe not so much for like political reasons, but could be manufacturing locations or infrastructure being built out in specific areas that might be avoids for people looking into doing things in Mexico?
Geographically, I mean, I would
Yes.
say that you would want to focus on, in particular, I would say the three major nearshoring cities are going to be Monterrey, number one,
Hmm.
Guadalajara, number two, and Tijuana.
Hmm.
Um, so I would, and Mexico City, I would say too.
Oh, okay.
So it's like anything in like this the north or like the northwest Pacific coast.
All right.
But like the major problems with crime and corruption in Mexico tend to be in the south.
Ah.
Like the south is significantly poorer and with a higher crime rate than other parts of Mexico. So just geographically, would look for the more of those manufacturing epicenters.
Yep. I love the comment section. It was it was going active like beforehand, and it's starting to pick up again. Maybe.
So did you say your favorite airport was OMAB?
Yes.
Is that right?
Yep. That's yep.
And I'm curious what type of evaluation you kind of have penciled out on that one. Like I'm gonna do my own here eventually, but yeah, thoughts on valuation around where it's at right now, because obviously it's what we're at. It's at all-time highs, right? Or wait, this chart isn't up.
Yeah, recently hit an all-time. It pulled back after its all-time high, but
Okay.
valuation, depending on what you want to use for forward numbers, bacon, it's anywhere from 9 to 10 times EBITDA, which if we compare historically, it's probably a little bit above where it's been historically. So like historically, it's traded as low as, well, actually, now that I say that, it recently got as low as 8, which was way too cheap. But like I think during the 2010s, it was frequently in the low teens. At one point, as high as 15 times. I think targeting a valuation, call it 12 times EBITDA, is very reasonable for the business. Certainly 9 times is a very attractive valuation for what you get. And like if we pull up their numbers, like return on capital is going to be 25% plus. Their margins, so margins are over 60% EBITDA margins. Growth, I would expect passenger growth to be 10% plus, or at the very least in the high single digits, which would translate to revenue growth in the low teens and EBITDA growth into the mid or high teens, or approach over 20% growth, depending on where you're comping the growth from. Yeah, so again, very attractive business. One thing to be aware of is that the valuation is best done as EBITDA. There is some weird stuff in the accounting for all these airports, given what's called IFRIC. IFRIC. If I'm pronouncing that. It's
That's a
IFRIC
good
23. Let me get the IFRIC 12 is the accounting that they have to use, given that a lot of their capital projects are done on behalf of the government. So it can make their accounting look a little weird.
Yep.
So now they do provide the numbers X IFRIC. So I would look at that, in particular EBITDA. So just kind of a tip there for looking at the statements.
I appreciate it. And
especially like if you want to compare airports, because they can have very different capital structures depending on what they're doing in terms of CapEx at any given time. because you can have very lumpy capex, right? So like 1 year you may have to do a bunch of improvements. Maybe you're building, multiple airports have terminal improvements or being built out or adding runways, and another year may have nothing. So you can have really, really lumpy capex from year to year.
Good to know. Yeah. Interesting. Yeah, I mean, it doesn't look like. I mean, just based off of, I need to fix my template here. I'm pulling some of the data I'm getting is wrong. Like my market cap calculation is off. And I'm not sure if that's just to do with, I don't know, the it
What's
being a
it,
Mexican stock, but
what's it saying?
yeah, what's like, oh, the history is correct, but the LTM of the current rate is totally wrong, right? So if I just copy that over, I get into like a more an actual historical LTM bottom line yields look a little bit better, but it was at like it wasn't even close. It's like
I think I know what the problem is. Your DCF model does not allow for 100 years.
Yeah.
You got to add
value.
50 more. You got to add 80 more years onto your calculations. Then the numbers turn out right.
Years to graph 30. Let's do that, and then we'll go over the income statement, and we'll say, okay, guys, the trend will continue, and it's just gonna go like that, and then we're gonna. It's perfect. It's perfect. Oh my gosh. Cool. So let's see if we got any questions. It's getting a little bit late here, but it's been a good conversation, Leo. I appreciate it.
Yep.
It's
Yeah, absolutely.
I've heard your like talk about it every now and then, and I was like, man, I gotta just get him on and ask him questions and try to pick his brain. So I really appreciate it. This is definitely something that's interested me. I just like couldn't wrap around my head around like how I would potentially want to play it. But the airport thesis makes a lot of sense for sure.
I only have one last thing, but I can wait. Or
no, go for it.
Okay, Leo, if you wanted to tell people where they can find you as far as social media, where can people find you?
I don't really do much social media. I do have a Twitter that I don't really use. I'm sorry, X.
Yes.
I do have an X.
Yes.
You have an X that you don't really use? Really?
Married man.
Oh, right. And then, but
sorry.
Primarily, you can find me on Discord. Either actually, I am in your Discord, Jesse.
Yeah.
Or in Capital Mindset.
Yep. Cool. And yeah, maybe we'll have a follow up sometime, and maybe just do a deeper dive into maybe a single airport, and then valuation model out, talk a little bit more. But yeah, this was great for the kind of the overview of the nearshoring thesis and different ways to play it.
Sounds good. Happy to be back.
Cool. On. All right. Thanks everyone for joining.
Disclaimer.
Disclaimer.
Yeah, you failed.
Disclaimer. That's why I have bacon on here.
Yeah.
Well, what? Obviously, not financial advice. Not financial advisors. I don't think any of us are. But yeah, have a good one. Check out the Discord if you want to. Check out Financial Modeling Prep if you want to with the discount code. Like, subscribe, and whatever else people say on YouTube. So thanks, guys. We'll see you hopefully next week for another live stream. Bye.
See you later.